Inflation makes most people poorer, but somehow the rich keep getting richer. It's almost like this system is designed to make certain people rich at the expense of everybody else. Oh, it is. Today I'm going to show you how wealthy people use inflation to grow their wealth and how you can do it too, even if you didn't grow up with rich parents. And it starts with you understanding money, because our money today isn't what money used to be 60 years ago, because on August 15th, 1971, President Richard Nixon took the dollar off of the gold standard, which changed our money forever.
Inflation robs every American, every one of you. I have directed the Secretary of the Treasury to take the action necessary to defend the dollar against the speculators. I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold or other reserve assets, except in amounts and conditions determined to be in the interest of monetary stability and in the best interest of the United States.
This means we went from transacting with money that was backed by physical gold to then transacting with fiat currency, the same looking dollars, but now instead of being backed by physical gold, it's backed by a promise by the United States government that the money that you're using has actual value. This had a lot of implications. Number one is our central bank, the Federal Reserve Bank, now had the ability to print essentially an unlimited amount of currency, because you didn't need more gold to print more of those dollars. And this then helped the economy boom, because now all of a sudden there was a lot more money, or at least what we thought was money, this fiat currency, entering our economic system, because now the Federal Reserve Bank could print more money, lend it to the United States government, and then the government could then do whatever they wanted with the money, which then boosted the economy. It created more jobs. But it had the impact, which was, of course, inflation. If we look at the 5 decades between 1971 to 2021, the median household income in America grew by around 700%. It was actually a little less than that, but let's round up for the purposes of this example. During the same time period, the average new car sold in America grew by 840%. During the same time period, the median house sold in America grew by around 1,200%. And during the same time period, the average cost to go to a public university for 1 year grew by around 2,000%, which means for the average person, the $100 that you had sitting in your savings account now buys you less stuff, and the money that you're earning from your salary buys you less stuff. Well, at the same time, investors got rich. Why? Because of the same 5 decades, we saw the stock market, more specifically the S&P 500, grow by more than 4,000%. This is what happens now when you start to print more dollars. Those dollars enter economic circulation, it creates an economic boom, but then you realize slowly that you're paying the price for that boom through the hidden tax, which is inflation, which means your money can't buy you as much stuff, and these more dollars are going into the hands of businesses, which are ultimately benefiting, of course, the investor. This is why my goal for you is to understand how the wealthy can do this, that way you can do it too, which I'm going to show you in this video. But also, this is why on August 12th, 2025, I'm hosting my biggest investor workshop of the year, where I'm going to be showing you, number one, how you can find investment opportunities through this changing economy, and number two, how you can invest your money strategically through a Trump presidency, through the geopolitical changes, through all the tech and AI shifts that we're seeing right now. How do you find investment opportunities through all of this craziness? This is a completely free workshop. It is designed for investors that are already investing their money or are ready to start investing. But if you are interested in joining me, please, I encourage you to register soon, because we have hit capacity every time I've done this workshop. I'm doing it twice on August 12th, once in the morning at 10:30 a.m. Eastern Time, and then again in the evening at 8 p.m. Eastern Time. So if you'd like to join me on this workshop on August 12th for free, all you have to do is click the link down in the description below to register. When you understand how the system works, there's a couple things that you can do. Number one, you can try to deny the inevitable. You can say, oh, you know what? This is just something that happened in the past. This inflation is no longer going to be a problem in the future. That's one option. Option number two is you can hate it, you can scream, you can complain, you can cry, you can just hate the system and just be angry. which doesn't do really any good for you. It doesn't feed your family. It doesn't help you build any wealth. Or number three, you can actually learn how to win in this system. My goal for you is to understand how to win in this system. And because I consider myself a fun random guy on YouTube, let me show you why this isn't something that just happened in the past. Let's take a look at the last 5 years. So for the last 5 years, between 2020 to 2025, the median household income in America has grown by around 21%. It's a little bit under that, but we'll round up for the purposes of this example. While at the same time, the reported inflation numbers are 24%. Again, that's the reported average inflation numbers. I think a lot of people have felt even higher inflation than that, but let's stick with the reported numbers, which means for the average person, your income did not keep up. If your savings did not grow by 24% over the last 5 years, your savings have effectively made you poorer, while at the same time, the stock market, more specifically the S&P 500, has grown by around 90%. So yes, it doesn't look like this is changing. The government is going to continue spending money they don't have. The Federal Reserve Bank is going to keep printing money out of thin air, which means inflation is going to continue happening. And the average person who doesn't understand this is going to become poorer. The average person who only relies on their salary and keeps saving all their money is going to become poorer. But the person that understands this can become wealthier. Again, 3 options. You can believe it's not going to happen. You can kick, scream, complain, and cry, or you can do something about it. Let's talk about number 3 now. How do you actually do something about it to become wealthy? And what you have to do, number 1, is you have to take the money that you are earning, the fiat currency that you're earning, call it whatever the heck you want. You got to take this money that you're earning from your job and you have to transfer it into an appreciating asset. See, the mistake that a lot of people make is you make money to buy things. I go to work every single day and then I use my salary to pay for my house. I use my salary to pay for my car. I use my salary to pay for my clothes. I use my salary to pay for my groceries. I use my salary to pay for my vacations. And then I save when I invest if there's any money left over. Well, that is a strategy to be broke for the rest of your life. Period. Now, I get it. Life is hard, especially when you've been seeing so much inflation. And I get it. The economy hasn't been the best. I get it. The job market hasn't been the best. But here's the reality. This is not going to get better. It's not going to get easier this year. It's not going to get easier next year. It's not going to get easier the year after that. It's only going to get more difficult. So you have to get serious about this sooner rather than later. If you spend all of your money, you will never have money to actually build wealth. So step number 1 is you got to get your money in order. Okay? If you have credit card debt, if you have $0 in savings, no emergency cash, you were a recipe for disaster right now financially. I call it the financial danger zone. So the very first thing you got to do, okay, you got to get rid of the credit card debt. You got to get at least a couple $1,000s in emergency savings. That's not all that you need for your emergency cash, but you got to have some just in case you get laid off, in case your kid gets sick, in case something happens to you. You got to have some money to be able to fall back on so you don't have to go into credit card debt. Once you do that, now you can no longer spend all of your money. That way you have money to invest, because what wealthy people want to do is they want to earn money to buy investments that make them more money, because wealthy people want to live off of their investments, not their salary. Now hear me very carefully here, because this is the part that a lot of people get very overloaded by. Wealthy people want to earn money, that way they can invest money so they can live off of their investments, not their earnings. The average person, the average broke person, which is the majority of people, want to earn money and live off of their salaries. I worked so hard to get my degree. I'm a doctor, I'm an attorney, I'm whatever. Why wouldn't I want to live off of my beautiful salary? Because that's a recipe to be broke in this economic system. And so what you want to do is take your salary and dump as much of your salary as possible into investments. That way investments can start to grow. Maybe they pay you with cash flow depending on what you're investing in. And if you can live off of your investments, well, now you are financially free, because number 1, you don't have to keep going to work to get paid. Number 2, if your company lays you off, no big deal. You have your investments to fall back on. Number 3, if you were to die, no big deal. Your family has assets to live off of. I know that was really, really morbid. I'm not talking about the emotional side of things. I'm speaking just financially, so I'm sorry about that. But the whole idea now is when you own the assets, your assets benefit from inflation. We've seen this happen decade after decade after decade after decade. Investment values generally benefit from inflation. Now, yes, there are times where asset prices fall. We've seen stock market crashes, we've seen real estate crashes, we've seen cryptocurrency crashes. It's a part of our economic system. But if we zoom out and we look at stocks and real estate specifically, we know that over the long term, investment values generally go up. And I'll show you how to make those better investments in this video. That way you don't have to put in too much time and research if that's not something that you're interested in. But it starts with you taking the money that you're earning from your job, understanding that this cash that you're earning is a liability. You don't want to turn this cash into more liabilities like your cars and your clothes and this other stuff. You want to turn as much of this cash into an asset as possible. And once you can do that, now the game is stacking the assets until you can live off of the assets. A simple rule of thumb that I teach is that for every dollar that you earn, you are going to save and invest a quarter of that. And a simple way to follow this is 75, 15, 10, which says for every dollar that you earn from here on out, 75 cents is the maximum that you can spend, 15 cents is the minimum that you invest, 10 cents is the minimum that you save. Notice I say minimum, not maximum. If you can do more, do more. Start wherever you can, work to get here, and then work to invest more. The more you invest, the wealthier that you can become. Now, here's the thing that you want to understand. This money that you spend on your house, on your cars, on your clothes, on your vacations, this is all liabilities, okay? This is not actually going to make you rich. This will make you look rich, but it's not going to actually make you rich. These savings are there to protect you against something. It's not there to make you rich. We were taught growing up, save your money to become wealthy. Unfortunately, your savings are making you poorer because they're losing value to inflation. Now, that doesn't mean you shouldn't have any savings. You want to have savings to protect you against an emergency. You want to have savings to be able to buy investments. You want to have savings to be able to buy things like a house, which is why you need to have this, but it's not going to make you wealthy. This is where your wealth is going to be built. This is your investments, which is why the more you can invest here, the better. And this is where everyone says, okay, Jaspreet, I get it. I need to invest my money so I can benefit from this system, and I get all that. But where do I actually invest my money? Every time I find a stock on Reddit, I lose money. This is where you got to understand the different ways that you can invest your money and how you can lower your risk and actually get some decent returns. Because the reality is there are ways to do that. A lot of people assume that investing is finding the next Tesla, the next Amazon. For most people, that's not the way to do it. For most people, the best thing to do is just to invest in the markets and get the returns of the markets. And that's going to seem a little bit weird. But if we look at the markets over the last 100 years, the stock market has averaged more than 10% a year. And if you can invest $5 a day, just $5 a day from the age of 21 until retirement, and get that 10% a year, you will retire a millionaire. Now you might say, Jaspreet, I don't want to wait until I'm retired to become a millionaire, and a millionaire is not that much money when I retire. I'm talking about $5 a day, okay? If you can invest more, you can get better returns, you can have more wealth, but I'm talking from the very bare basics. Everybody can retire a millionaire with $5 a day and a 10% return. Now, how do you actually get those returns? Of course, nothing is guaranteed, and I'm not a financial advisor. I can't tell you what to do. I'm just a random guy on YouTube. Investing has risks. You're never guaranteed to make money when you invest. In fact, you will lose money at some point, so make sure you always do your own due diligence and never blindly trust a random guy on YouTube. But here's a couple options that you have. If you just wanted to invest in the total stock market, you can go out to any stock brokerage and invest in this ETF, VTI. This gives you exposure to the total stock market. So now instead of you investing in the thousands of stocks in the stock market, this one ETF, this one fund will give you exposure to the total stock market. So if the stock market on average is going up, your fund goes up. If the stock market on average is going down, your fund goes down. Now maybe you say, well, that's cool and all, Jaspreet, but is there something a little bit more niche? Well, you could look at something like SPY. SPY is an ETF that will give you exposure to the 500 largest companies in the stock market. It's called the S&P 500. Now, instead of you going out and investing in those 500 largest companies, this fund gives you exposure to those 500 largest companies, which means, yes, you get exposure to companies like Amazon and Apple and Tesla. And if Amazon were to go bankrupt tomorrow, hypothetically, this fund would kick Amazon out when they're no longer one of the 500 largest companies and replace it with another company, and you don't have to worry about touching it. That way it's completely passive for you. This just gives you exposure to the 500 largest companies. Now you might say, well, that's cool, Jaspreet, there's any other options? Well, DIA. If you've heard of the Dow Jones Industrial Average, this is an ETF that gives you exposure to the Dow Jones. The Dow Jones is a group of 30 companies that gives you broad exposure to the United States economy. So you can invest in that through here. And one more option, you may have heard of the NASDAQ. QQQ is an ETF It gives you exposure to the NASDAQ. The NASDAQ is a group of the 100 largest non-financial companies in the stock market, which today, at the time we're recording this video, means it's a lot of tech companies. So, if you wanted broad exposure to the market and didn't really want to think about it, didn't want to have to find the next Tesla or Amazon, this can give you that exposure depending on which fund or funds you want to invest in. And if this is what you want to do, this is called passive investing, then you need to do it properly. And the way that you do it properly is by doing what I call ABB. Always be buying, which means you need to set up a system, okay? Every week, every 2 weeks, every month. And you set it and forget it. Where every week or every 2 weeks, every month, money should be pulled out of your checking account and automatically invested into whatever funds that you want to invest in. There are many other fund options out there. This is just a few examples. Again, I'm not telling you what to invest in, just a few examples to get you to start thinking. But in this passive investing strategy, all you do is you set it and forget it. I follow this passive investing strategy. I also do active investing, but this passive investing strategy for me is every Wednesday, money is pulled out of my checking account and it's invested into my portfolio of funds. Now for me, I invest in things like the S&P 500. I also invest primarily in a lot of dividend paying funds and a couple others. But it's set it and forget it every Wednesday, no matter what. If the markets are booming, I am buying because the first A is always. If the market's crashing, I'm buying. Why? Because the first A is always. If it's raining outside, I'm buying. If it's sunny outside, I'm buying. If it's a Democrat in office, I'm buying. If it's a Republican in office, I'm buying. Always be buying. And the reason why I'm emphasizing this so much is because next time you go through a market crash or a recession, you're gonna have a lot of panic and a lot of people freaking out. People will say, oh my God, do I keep buying? Yes. A stands for always. Always means always, no matter what. In fact, the only time I really change this is when we're going through a big downturn. That's the time where I buy more. So this is the way you win. Keep this going on for years and decades, and this will be a path for you to build wealth. That's what history has shown us. The alternative, for those of you that want to be a little bit more involved, for those of you that like financial research, for those of you that like to keep up with companies, again, not for everybody, that's where active investing comes into play. Active investing is more work, more risk for more potential reward. This is where now you're looking for individual companies. You are looking for stocks that you believe are going to benefit, which means number one, you have to know where the market shift is happening. And then number two, you have to study the company inside of that shift. So what I mean by that is you might read some research saying that there's more money going into data center companies because a lot of artificial intelligence and a lot of quantum and this shift in technology means that we're going to need more data centers. Okay, great. That is a shift. And that's where research can help you. But then you want to take it one layer deeper. Not every data center company is going to benefit because some data center companies are going to not be very innovative. Some are going to have a horrible CEO. Some are going to manage their cash badly and take on too much debt. And so even though there's more money flowing into that shift, some companies will do very well, some might do horrible. And this is where you have to be able to analyze the stock, be able to research the company. Again, if that's something that you're interested in, great. You can get much better returns than the market, but you can also lose all that money a lot faster. So this is where you have to understand the game and know your strategy. And you can also look at investing in places like real estate. But this is where the key. If you want to use inflation to your advantage, you got to understand that, hey, inflation is going to happen. Inflation benefits the investor. And if you want to now benefit from this inflation that's happening, you can't spend all of your money. Follow something like 75, 15, 10. Take the money that you want to invest and now put it to work. How do you put it to work? Well, number one, be a long-term investor, not a trader. Traders don't actually make any money over the long term. Investors do. Be an investor. Look at stocks, look at real estate, or look at starting your own business. But really, stocks and real estate are those passive type of investments. And now decide, do you want to be more of a passive investor? Do you want to be more of an active investor? If you want to be a passive investor, great. ABB, okay? Find the right funds for you, set it and forget it, and let that go for a few decades and then thank me later. Active investors, great. more risk, more potential return. Now you got to start investing in your research. You better be investing in research. You have to pay attention to what are the shifts that are happening. That way you can find opportunities there. For you active investors who want to find those better opportunities, again, this is what I'm going over on my workshop on August 12th. I have the link for you to register down in the description. But these are the things now where if you can understand this, that's where you can get the better potential returns. Not guaranteed, better potential returns if you are willing to put in that work. America is entering a death spiral.
When debts rise relative to incomes on a chronic basis, right now for the U.S. government, it's almost $1 trillion a year that goes to interest payments. When you run a large deficit, you have to sell debt to do that. And when I calculate it, the quantity of debt sold to be sold is much